Hello, everyone. So basically, two members, I was explaining that because Wednesday fixed contracts were going to expire, I was assuming that the market was going to rally into that expiration date. So that occurs tomorrow. So today's video, we're going to take a look at the S&P, the NASDAQ, the Russell, what the next steps are for the market, what there is to look forward to for the rest of the week, and we're going to put it all together. It's going to be a nice, interesting, fun video. All right. So without further ado, let's get started with the video. All right, so number one, fixed expiration calendar of 2024. So tomorrow, March 20th, the VIX contracts expire. And that is very, very important because market makers want the VIX to trade below certain strike prices. All right, so I'm going to show you. All right, so the VIX, you can see that it's at 1383. It had a lot of open interest at this $14 level. And market makers essentially wanted it to close below 14 so that these contracts, the calls, expire worthless that are expiring tomorrow. Now, because the VIX, because the VIX has an inverse relationship to the market, right? So if the VIX is falling and it's showing weakness, then the market is going to show strength. And if they wanted the VIX to close below a certain price, then they would need to cause the market bounce. And I was basically telling members that that's what I think is going to end up happening. The market should be rallying because they want the VIX to close below 14. And that is currently what ended up happening. And we saw a clear-cut indication of that going on all day today. If you were looking at the S&P or any indice, we just saw extreme buying pressure the entire day. It looked very, very mechanical, and it was not really fluid or safe sort of trading. There was no real pullback on any of these moves to the upside. So a lot of shorts just got completely burned. We never got a solid pullback like we normally do in any trading days to begin with. And I think it was primarily caused by the mechanical buying that they wanted the VIX to close below a certain level. All right, so that's that. So now that was the main thing that caused a lot of the price action today to be very, very bullish. But now to top it off, we have the federal funds rate at 2 p.m. tomorrow, and FOMC statement and FOMC press conference at 2:30 tomorrow. Thursday, we have more news at 9:45 and 10 a.m. And then on Friday morning at 9 a.m., Fed Powell speaks again. So Fed Powell is speaking 2 times this week. And my thought process in general, right, was my thought process was after the VIX expiration contract rally on the SPY, heading into FOMC statement, I believe it makes more sense to be a bit bearish afterward because the market, I don't believe, is going to be able to sustain this move to the upside. I think the market should get a pullback now. And any sort of bounce, I was saying also, any sort of bounces that we had would be a good shorting opportunity. And personally, that's what I think is going to end up happening. The SPY is currently trading at 516. Yeah, and I think that this mechanical bounce due to VIX expiration contracts, that's over now. And once again, we have to remember that 77% of the time we end up closing red for the week. The bullish catalyst, the real bullish catalyst for the week just ended. And the main thing is, the other thing is that 77% of the time we end up closing red for the week, which is below 510. So we're essentially 77% of the time should be closing below 510. And as we get higher and higher, right, at these levels of resistance, the risk reward to be short with that percentage in mind becomes very, very high. Because as we're at 515, 516 area, if your downward target is below 510 based off of statistics, right, and your upward risk is only $2 or $3 to the upside, but there's a 23% chance that we close above that. I hope this makes sense, but the mathematics just end up being in the short's favor. So now it all depends on what's going to end up happening tomorrow with FOMC. Regardless, this week, my thought process is just to lean short on pops. That's essentially it. For swings, my thought process continued is heading into April and May. Essentially, I believe that the market should get a bit of a pullback. A nice 5 to 7% pullback is completely healthy and normal. I do believe that we should hit at least 480 to 485. Breaking below 500 is basically on the table between April and May, and that's my thought process. So I hope that makes sense. For the market so far, we took a look at the SPY. The NASDAQ also had a bit of a bounce. The IWM was doing the best out of the NASDAQ as well. But then when you look at the large tech stocks, Tesla continued to hold 160, but it's holding below 173. Apple bounced towards the end of the day, but it's holding below 176. Meta basically tried to regain yesterday, but it held support. Netflix did well. Google also is clearly, it's just holding for dear life around 146, 147. My main thing, all right, and let's just take a look at Microsoft and Amazon. Microsoft did well, obviously, and then Amazon also bounced. So my main thing is like these setups, you're basically just going long at support, and the winners, right? NVIDIA, AMD, Google, Microsoft, they need to consolidate a bit so that the money goes and flows into Apple, Tesla, Google, essentially. And NVIDIA started to bounce a bit. AMD actually dropped very dramatically. So now AMD has very, very important support at 174. So I was showing how if AMD did not hold this 184 level, then 174, 175 would be on the table. And it's going to be pretty interesting to see how that goes. But truly in general, like, let's also take a look at the dollar. So the dollar is also doing really well, and the dollar is another key indication that of an inverse relationship. So if the dollar is rising, then the overall market should be falling. Okay. Now, I know I threw a lot of information at you guys. I know that it's like it could be a lot to consume all at once, but very, very simply, all we're doing right now is I have a bias to the downside for this week based off of statistics. And the dollar, as it rises, the market should be falling. So we're clearly seeing strength out of the dollar. The large tech stocks are not, they're going to continue bouncing and everything. But the main thing is also the risk reward as we get higher and higher, closer to this 518 all-time high that we have. The risk reward to be short becomes so much better. And I don't believe that Powell is going to say anything dramatic that's going to cause us to break above 522, 520. Of course, all of that is possible. Trade is a trade, but the higher likelihood chance is we got this bounce into Vixpiration day, and that is currently causing the market to bounce. In my opinion, this should end up being a bull trap. So we're going to see how that turns out. And yeah, it's going to be pretty interesting. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe. Let me know what you guys think. And I will see you guys bright and early tomorrow morning. Have a good one. Thank you.